Good afternoon, everybody. Welcome to TraderMerlin Show for your Tuesday afternoon edition, November 29th, getting down to the final couple of days of November and then the sprint into the new year. And who knows if we'll see that Santa Claus rally. Today's going to be an open Q&A day. I have a few questions that came through that I wanted to make sure I got a chance to get to because y'all take your time to send those questions to me here on the show, and I want to make sure I get to those. So for those of you who might be new, you can put your comments, your questions, your feedback, whether it's positive or negative is great. Just let me know. You can put that down below the YouTube channel on any one of the videos there. Just type your comments and questions and I will get to those. Now, there's been a few comments lately that have been, I would say, edging on the side of political, especially some of the stuff we did yesterday when I talked about China and Foxconn and Apple and the COVID lockdown. And a lot of people saying, well, it's because of this political affiliation or this political. It's like, look, bottom line is, I don't really care, again, whether this is a Democratic thing, a Republican thing, current administration, past administration. All I know is that there's a series of events that are going to happen from political view, maybe, or from an economic perspective, that's going to create an action in the market. And from this show, that's really all I care about. I care about which way these markets may potentially go so I can position myself to make money off of it. Whether I believe that those actions are correct, that they might be the right thing for governments to do or the wrong thing for governments to do, honestly, is irrelevant. I don't have a say in that or a dog in that fight. We all have our belief systems and think markets or things should be a certain way. But reality is, throughout life, things are going to be very different than the way we feel is going to be our utopian view of it. So I can't let that bother me. I think you can't either. You need to focus on it and say, okay, if Apple's going to lose 6 million phones, that's clearly going to hurt their bottom line. If Apple goes to war with Twitter, which looks like that may happen here, that's not going to be good for either one of those two parties. And we'll talk about that today. That's a question that came through, but I wanted to address that one. And again, I love the feedback. I love the interaction that you guys do on here live, but also on the YouTube channel. So for anybody who might be new, hit that subscribe button. And if you like it, you like it. If you don't like it, then you can email me at TraderMerlin@gmail.com and tell me, here's what I didn't like about your show, and here's how you can make it better. And I'll listen to everybody's words of advice. Of course, I always like the positive comments as well. All right, done. Let's get that out of the way. Let's look at my wonderful graphic here for November 29th. Yes, Q&A with Trader Merlin. I'm going to start off with our economic stuff because we had at the end of the day, it was really boring. It was not like the greatest day. However, that opening hour and a half to 2 hours was actually really exciting and then a beautiful trend formed. So at the end of the day, markets looked flat and boring. However, from an intraday perspective, there was some good action. Now, I did not make any new trades today. I didn't own any new positions, just sitting on the ones I currently have. There was some excitement in my portfolio today, that's for sure. But let me start off with the earnings calendar, and then we'll look at economic announcements and move on from there. So, start things off with our earnings calendar. Now, there were a bunch that reported today, although there's not that many huge, big main names that you might recognize. Here you have Intuit reported. They beat earnings and they were down. You had Bank of Nova Scotia. They beat earnings and they were down. You had Workday. They beat huge, and actually they were up. CrowdStrike beat earnings, but it was down 20%, almost 20% on their share price, and Network Appliances beat as well. Now, this is a stark contrast to what we saw at the beginning of earnings season when a lot of these companies were beating earnings and having a huge rally up. Now we're seeing companies beat earnings and all of a sudden it looks like just negativity out there. Now, of course, this may have a lot to do with the overall markets pulling these things down because we had a down day today for the equity markets. But all in all, I think that we're starting to become numb to the earnings announcements, and now it's focusing on next quarter. What really was the driver for me anyway today was some of this economic data. And I know it's kind of hard to see here because there was so much. Let me see if I can. True, Tom. Flat and boring iron contrast for yeah, it is. Well, I say just at the end of the day, it looked boring. But actually, there was some great trading activity intraday. Unfortunately, I wasn't day trading today, so it didn't impact me. Let me see if I can stretch this screen out here just a little bit to make it clearer for you guys. And I'll take that picture, and I'll do that. And we'll put it over here. So now, let's put it there. Got to keep my logo on the screen. There you go. So if you look what happened out here for the global markets, it really was a lot of negative information for most of the world. You saw Canadian GDP drop up here. You saw mortgage approvals for the UK decline, so things starting to get a little bit worse and worse and worse. Hey, Don, good to see you. You have the Case-Shiller Composite 20 Home Price Index, and this is one that I mentioned on yesterday's show near the end on how critical this one is, because we were up at 18, 19% year-over-year growth for housing prices, and that is very unsustainable. And all of a sudden, the numbers are dropping quickly. Actually, worse than expectations. They thought it was going to go from 13.1% to 10.5%. Came out 10.4. So this might drop even more over the coming months, especially as we see mortgage approvals start to decline. We see credit numbers starting to get a bit worse, and that could further constrict that housing market. So keep an eye on this one. I think that this is probably one of the bigger pieces from a macro perspective that's going to impact our markets. If these numbers continue to drop, and we see the year-over-year growth and HPI data get lower and lower and lower and lower and lower, then ultimately what that means is people are going to get underwater on their homes, and all of a sudden they're going to start to panic, maybe go into foreclosure, and we could see some bad situations, down the road, not right now. Other information for the U.S. is really just consumer confidence, which was slightly higher than expected, but honestly, I don't even look at consumer confidence numbers. It was not that important. So HPI data as well. You had a negative 0.7% previous month. They thought it was going to get worse. Actually got slightly better here. So all in all, most of the data is slightly bearish. And you're probably wondering, well, how did that impact our overall markets? Well, let me start from the bottom and work our way to the top. NASDAQ, which again, I did 30 puts on yesterday, which made for a decent day today, down 0.84%. And here's a 5-minute chart of it so you can see what I was talking about. That opening rally, right? You had a nice little rally up in the morning, and then right around 8 o'clock, 7:55 in the morning, Pacific time, it just plummeted here, and we saw a pretty nice sell-off, and I was getting really excited. I thought this might be, the beginning of a huge down move in the NASDAQ, but it kind of caught itself base and then traversed sideways for pretty much the entire remainder of the session. So Tom and your iron condors, great, gotta love that action. But let me look at the daily time frame here. This one is definitely more negative than some of the other indexes, which we'll look at here in just a second, right? I already have these two yellow boxes, so I'm not going to draw a third one on here to make it more confusing. But if I take this little red dashed line here and move it to the lows that we saw for the past couple of weeks, we've closed lower. So this is technically a fairly negative picture for the NASDAQ, and my gut feeling tells me we're going to come back down and challenge this lower yellow box, which starts at, well, this isn't exactly a good, well-drawn one. I can go to a shorter time frame to, let's do it right now. Just go to a shorter time frame and see where it might fit the best. So, yeah, I guess you've got two on here. You've got this little guy right in there, which would be more appropriate for the first step down, and then ultimately I'll just put a line across this bottom here, which would be more of my second target. So first target on this is going to be right around 10,890 to 10,820, and right now we're at 11,519. So forecasting about a 700 point drop if we can get some momentum down below this 11,525 mark. So that's right. You like to stack them. Yeah, I like to keep my space. I don't want to be overwhelming with yellow boxes. Don's charts are a little bit more active and busy than mine are. I like to just really focus on what price is doing. And at this moment, this is a very bearish picture for the NASDAQ. We've closed below those recent lows. And then if you notice this 4-hour time frame, going back to this move that started up on November 10th, there's really nothing strong from a demand zone perspective until we get all the way down here to the base of that move. So that's, I'm feeling pretty optimistic about a further sell-off here. And I think, when you look at some of the technical stuff, great, it looks bearish. But the fundamental pieces now are starting to stack up. We did that show yesterday talking about, the market's big problem. And I was focusing on Apple and their dealings with China and the COVID lockdowns, the policy, et cetera, and the strikes that are going to go on in China or going on in China. But the other side of this is, again, the Twitter war with Elon Musk and Apple. Elon Musk is really trying to make a big example of Apple and their 30% kind of secret fee they're charging all developers and apps on the platform and saying that's prohibiting free speech. Apple saying they may ban Twitter, and then Elon Musk saying, hey, I'm going to start up my own cell phone company. Crazy to see. It'll be interesting going forward, but remember, uncertainty usually results in down markets. And if you have that much uncertainty with Apple on their earnings front because of all these, Foxconn shutting down and not getting devices, that could create big problems. And now all of a sudden you're creating a feud with one of the richest men in the world. Yes, Apple is the richest company in the world, but Elon Musk is the richest man in the world. Now, granted, he's lost a lot of his money here recently because of slides in Tesla and markets overall. However, he still has a lot of sway, and it'd be very interesting to sit back and see what goes on here. And if his pressure against Apple starts to make even more down headwinds for Apple shares. So I think that that's part of the reason why I opened a position yesterday, or reopened a position short on some puts there, or long on puts, but short on Apple. NASDAQ, you guys know I can't trade Apple. Here, let's see, S&P. So here's S&P on a daily time frame, which was slightly better than what we saw with the NASDAQ. It was only down 0.2%. And this is the spinning top. This is a pattern that is very indecisive. It means that really nothing is going on. And coming off the heels of this really big down day yesterday, that giant red candle, you would think that this would have some momentum and follow through. But it didn't. Today we were down a little bit, we were up a little bit, and ultimately we closed slightly down, ever so slightly. So to me, this is a hesitation pattern. Normally, this candle, which is called a spinning top usually has a small real body, small bottoming tail, and usually a larger topping tail, but in this case, you call them pretty much even, represents indecision. Now, if I see indecision after a big run-up, well, that tells me that there's probably about to be profit taking. However, when I see this, it really makes no difference to me. And I think it goes to Skilled Stocksman's point right here. He says, many spinning tops lately. Yeah, and I think it's because a lot of people just don't know what's going to happen, right? They're not really speculating, and they're not driving prices up or down very quickly. And Skilled Stocksman's right. If we look at this S&P going back to, let's say, November 11th, you could make the argument that there's 1, 2, 3, 4, 5 spinning tops out of those. And all of them have topping and bottoming tails and small real bodies. That is just people hesitating. Now, typically, when you have those types of actions and there's something is in an uptrend, and if you notice here on this S&P, we've been on a slight uptrend since middle of October. Now, grand scheme of things, yes, we are still on a bigger picture downtrend, but if we look here, it's on an uptrend on the shorter term. I don't see any supply at current levels, so it tells me that we're probably going to be going higher to 41.37. Now, you're like, well, if we're going higher to 41.37, why are you short on the S&P and why are you short on the NASDAQ? Because in this case, I'm looking at the technical picture as taking a back seat to the fundamental picture here. Normally, I would put technicals before fundamentals, but because of what's going on right now, I'm putting a little more emphasis on the fundamentals, meaning what's going on with China, Foxconn, Apple, Twitter, and all that stuff, and being a little bit more bearish in the short term. So we'll have to wait and see here. Some of my SPX friends' options are saying yesterday's move was starting the preset for Santa Claus and his rally. Maybe. I think it's a little too early for that. And, we'll talk about the railroad situation here in just a second. We've all got gifts and everyone's been spending money. Right now, you're seeing some of the record numbers for Cyber Monday and for just Black Friday sales. And we are potentially facing some major supply chain disruptions. So some things that you may have bought and are going to get delivery in a week or two, that may actually not happen here because of what's going on with the railroad. So I'll look at that here in just a sec as soon as I get through our top 7. Let me run through these more. S&P showing hesitation. Same thing with the Dow, although the Dow has a much more bullish picture, right? Dow was making higher highs, higher lows. Dow's been looking great, even though I don't like the Dow. Who cares? It doesn't matter what my opinion is. Hesitation right now. This would lead me to believe the Dow is going to go back to the upside because it's hesitating after a pullback in the bigger of the big prevailing trend. Russell 2000 was your positive one out there, 0.25% today for the Russell, 1837. I don't think we're out of the woods here yet with the Russell, even though you have a positive day. Notice that most of the activity was at much higher prices today. So you had a much higher prices, and then all of a sudden, Russell closed lower, or started to move down lower, and really the result of it was because of a gap up. So Russell up 0.25%, but not a very positive picture here. I'd much rather have that Dow picture than I would the Russell from a bullish perspective. And then we get to some more positive stuff. 3 things. We've got crude oil, which did a nice little about face, although technically I don't think it's really saying too much, right? There was the expectation that we would see a little bit of a rally here in crude oil prices. Maybe we get up to this 81.30 mark, but I don't see it going too much higher than that, just given the prevailing trend, which has been to the downside. Crypto, who cares? 1.28%, but I mean, this thing's flatline. If you were at Kaiser Permanente and this was your EKG, they'd probably wheel you out in a gurney and throw you in the morgue. It just, even though it's moving up 1.28%, it's just flat compared to where it was just a few weeks ago when we had just extreme volatility. Good news is we're not making new lows. And lastly, gold. I've seen a little bit of an up move today, not too much, 1.34% up for gold. I've had that little downtrend line drawn there, which, of course, we talked about that being the trend break, and there was a double whammy here for gold for anybody who is long it. I was long, and I got my shares taken away last Friday on an options expiration, which is fine. I collected some premium. Once this trend line was broken here on, let's call it November 8th, that's one positive sign. But as soon as it broke above the high from October 5th, that's your second big positive sign. Notice it came back, retested. It looks to me like gold will be making some higher highs from here. It's got to get above this 1788 mark, or roughly 1788 or 1790. So I can now get rid of that downtrending blue line, because for me, it's reversed that. It's not necessarily formed a double bottom or a triple bottom. In hindsight, it looks like a triple bottom, but I need to start making some higher highs, and then we'll start talking more positive about gold and the current uptrend. By recliners out there, I bought a brand new mattress. Time for a new mattress. All S&P is rallying. All the S&P is a rallying base. It looks like the bulls catching their breath for the next move. It kind of feels that way. It definitely does feel that way, Don. It just looks like it's just hesitating. And the fact that it hasn't rolled over, gives you that more bullish feel. And that's just basically all technicals. So yes, if I had this just technicals, I'd be bullish on the S&P and other markets. But I just think that there's going to be... Thanks. I'm doing the best we can. I mean, I think most of you would agree that the more you do this, the more you just try to say, okay, just what is the data showing me? What are the charts showing me? And then I'll plan accordingly. I can't get too emotional and formulate a overly biased opinion about where the market's going to go, because then you forget what the charts are telling you. A lot of times you'll believe what you want to believe, and next thing you know, you find yourself in a very bad trade. All right, that was it for our top 7 markets. Dollar really didn't do very much. We did see the bond yields move up a little bit, but I want to get to some other topics so I can wrap up here today. So let's talk about this piece, which was a question from Lee. He says, how do you see the potential rail strike impacting U.S. markets? And conveniently, right as we started the show today, I saw a question like that from Tim Ritchie, who says, do you think the impending freight rail strike will have an impact on the markets? Heck yeah, I do. Absolutely. If you look at some of the statistics, there's some pretty big numbers posted for railways. And most of us don't use rail transportation firsthand, right? We're secondary or third-hand recipients of rail. For example, a lot of oil and gas, a lot of manufacturers that are in the Midwest are using train systems to get their products out. Anybody here who drinks Coors Light, if you drink Budweiser, not really a train-based business, because there's so many Anheuser-Busch brewing companies around the U.S. There's only one Coors Light brewing company, and that is in Boulder, Colorado. Is it Golden? I think it's in Golden, Colorado. Without rail, ain't nobody drinking no Coors Light. So, without that rail system, they can't distribute that. Now, maybe they have their own network or whatever. I don't know how they ship their beer, but if we get a strike, which is supposed to happen December 9th, so something to keep an eye on for the next couple weeks, is if we get a rail strike in the U.S., I think a lot more is riding on it than most people think. Most people think that, it's just trains shutting down, no big deal. The numbers I looked up are 7 million travelers use rail per day, which could be impacted by this. 30% of U.S. cargo shipments are done by rail. And roughly $2 billion would be estimated to lose per day if the rail system shuts down. Now, I know what you're thinking. You're like, well, the federal government's, or the Fed is unwinding $90 billion plus per month of bonds. Who cares? It's $2 billion a day. That's $60 billion a month. No big deal. It adds up to real money, and the bottom line is it'll start to impact businesses. Now, what is that going to do to prices? If all of a sudden we see major supply chain disruptions internally, I'm not talking about from China, just internally in the U.S., those wonderful Buy America products are going to start to get more expensive as demand is going to chase up that limited supply. So I think it could create some big problems. Now, do I think it's going to happen? No. From what I was hearing, Biden has already stepped in and saying the government's going to intervene here. We can't afford that. It'll be catastrophic for the U.S. I don't think it'll be catastrophic. Will it have an impact? Yeah, absolutely. And I think it's going to be bearish. I guess the question would be, what businesses would you target that use freight? Now, this is beyond my scope of expertise, but if I was really like, okay, I'm going to take this information, and if we do see a strike, then what am I going to look for? I'm going to look for companies that rely heavily on freight trains to distribute their product. Now, maybe that could be car manufacturers, right, from Detroit. How are they getting their cars out to everybody? You can get the car carriers that have 8 or 10, or I can just get a whole train of tons. Oil and gas are another big one. Obviously, you got Cushing, Oklahoma, but they got to get that oil and gas from their pipelines out to the rest of the world. A lot of that coming on transportation. So we could see a surge in oil and gas prices if that happens, which is probably why the Biden administration is like saying, we have to fix this because we already did our best to deplete U.S. reserves and get oil prices down as much as possible. This would all of a sudden create a pop-up. But what about the railroad stocks themselves? I'll look across the board here on some that I know that I've followed over the years. I don't trade rail stocks, but you can look at UNP, right? Union Pacific. And Union Pacific is already down significantly. We were back over 280 earlier this year, bottomed down around 185 recently, and currently sitting at 212. Well, from a trend follower's perspective, this looks to me like I'd be wanting to go short on Union Pacific, but maybe I wait for confirmation. And that line, for me anyway, would be right here, which is just below the low of the candle on November 17th. And let me put the snap tool on there so I can get the exact number. Should be about 206.95. So if we get a close below 207, then I think you'll see more downside move, probably challenge that 180 mark. But I don't, we'll see. If we do go on a strike, Union Pacific is going to suffer. You have, what's another big one? CSX. Yeah, there's another big one. So here's CSX, which actually is looking great over the past month, but, still overall bearish because it was up at $40, $39, hitting a low back here about 25, and now we're at 32. So it looks great. It looks to me actually like a very bullish pattern. This looks like an ascending triangle. It's got a nice uptrend. So I don't know if I would be shorting CSX, even though they're all going to be impacted by this. And I believe that there's 12 major railways that are part of this union that's potentially going to strike. 8 of them have already agreed to the contract, but there's 4 that have not. So my guess is that this is all going to go away. If they don't solve it internally, then you'll probably see the government step in and say, oh, you know what, we're going to have to do this. And it's kind of unfortunate because that's the whole point of a union, is to throw their weight around, their collective unionized efforts, throw their weight around and get what they want for their workers. Now, I don't know whether you're pro-union or anti-union. I worked for a union a long time ago, and I loved it on one hand, but then on the other side, I thought this was one of the worst ideas ever. In the company the industry that I worked in, it allowed people to sit on their ass and do nothing, to be lazy as hell and do the absolute bare minimum so they just didn't get fired, and the union to protect them. Now, I'm sure I'm sure that's a place in every place of business. However, I don't know what these railway people are getting paid, so it's none of my business. Bottom line is, do I think the strike will happen? No, I don't believe it will happen. You've got until December 9th until that strike deadline comes. If it does, I don't see it lasting very long. There's way too much economic pressure on this to let it go on a long time. So I don't think you'll see something that goes on month after month after month, but I could be wrong, especially going into the holiday season, right? A lot of companies are still waiting for their deliveries. That one guy that drinks Coors Light is hey man, the Coors Light was like the cool college beer, Joe. We fall under Railway Labor Act in the airlines. Oh, do you really? I did not know that. So are you telling me, John, that I did not know this, that this potential strike could impact airlines as well? That'd be very significant. Going into the holiday season, that would be huge. I did not know that, but heard pilots are going to strike. Yeah, I don't know. Let me know, John. That would be very interesting. I'll have to dig deeper into that. Any products coming from China into California going east? Correct. So for California, I'm not worried about it. We're going to get supply first. But if you're Colorado, Utah, Wyoming, Montana, got to get those snow shovels, you may get delayed on a lot of your products. This is, it's a tough question, Andrew. He says, Merlin, unions good or bad? I think it's a double-edged sword. I think on one hand, unions are great because it does protect worker rights. It makes sure that everybody's protected. There's a collective agreement. And in many industries in the U.S., I think the workers, how do I say this politically correct? I think most workers just don't really care. They just want to go collect a check, and they're not really active in working with their other coworkers to make sure that we're all getting paid the same price. And we do have health benefits and things are protected. On the other side, having worked in a union, I was so frustrated early on. There were some people, like I say, who literally milked it. And I didn't mind. I was one of those guys. I worked night crew for a long time in the grocers union. And I would love to walk in there in the middle of the night. I worked from 10 at night till 6:30 in the morning. I'd put my headphones on, and I would go as fast as humanly possible to stock all the shelves. I was flying. And the old dogs, they called me in the back room many times. They're like, hey, listen, can you slow down? You're making us look bad. Because these guys are just milking it. Cut, 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 cut. Whereas I'm stacking up 10 boxes in a row going, cut, 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 cut. And I'm flying. And I finally told them, I said, listen, guys, sit on your ass. Just go at your pace. When I'm done with my aisles, I'll come and help you with yours, and we'll just sit there in the back room and talk for an hour or two at the end of the day because all the job has been done. So I don't know. I like unions on one hand because I think it does protect the worker. On the other side, I think sometimes unions get play too hardball and push, as well as some of the people that are in the unions really milk it. But all in all, I would say they're probably good in maintaining a cost of living that we're used to. I think that if we didn't have unions, obviously on a universal level, we'd all be making a lot less money because the employers would have the weight to push us around and say, oh, you're not going to get a raise, we'll just hire somebody new. Now the unions kind of protect against that. But now we're getting political, don't need to go down that path. That's right, Don. Now you've got the Corvette. I'm sure you probably took a ZR1 motor and put it onto a snowplow and just blast through your front yard over there in Kansas City. Cool. Yeah, I'm with you, Don. I don't think it's going to happen. I think it's just talk track. And, if this really was going to happen, what do you think the chart of CSX would look like? If CSX was going to shut down, you'd already see some significant red candles on CSX. You'd already see significant red candles on NSC, Norfolk Southern. Norfolk Southern looks strong. So I don't think it's going to happen. It's one of those things that I feel like you should be buying call options on this, buy them out a few months, and as soon as this goes away, you might see railroads surge because they've averted this emergency. But I don't know. It's a little bit risky for me to make that play. I'm not playing any of the railroads. I'm not going to play this news announcement at all. Let's see. And you would have saved a good amount of the good workers at Twitter that, yep, totally. All right, let me go forward here. So there you go, Lee and Tim. That's my thought on it. Here's another weird one that came in. And again, we could talk more about this. I just want to steer away from the political side because it polarizes the audience, and I'll say something, and all of a sudden, one of you is going to end up hating me because I said something that was this aisle or this aisle, and that's not what trading's about. It's just basically saying, how is this rail strike going to make us money, period. All right, Jeff. Jeff says, what time of day, what's the best time of day to trade? There is no answer for this. There's no answer you can make that says this is the best time of day to trade. It all depends on what asset class it is that you're looking to trade. Each market will have specific instruments that trade best at certain times of day. So, for example, when I cut my teeth, when I first got started back in the late 90s, was the opening hour. I'm in California, so it's 6:30 in the morning till 6:30 in the morning till 8 in the morning was my sweet spot, man. It was so much big movement. I loved it. It was awesome. However, it's also extremely volatile, and if you're not quick, if you don't have good rules, you probably get wiped out in no time. So the best time of day if you're a short-term day trader was probably the open and the close of equities. If you are someone who wants a little less volatility, you could actually trade the middle of the day. And one of my good friends, Roger Best, he trades SPY in the middle of the day when you would think there's not a lot of action. And that's what he likes. So for him, that's the best time of day to trade. And how do we find that out is by tracking your results, looking and seeing what time of day you make the most money. And I mentioned this before. Most people measure their trading success off, here's how much money I'm making. That's wrong. Ultimately, that's not what it's about. Because if you just measure yourself on how much money you're making, you can't go back and say, okay, here's what I did right, here's what I did wrong, let me see how I can make more. If you focus on, okay, here's my P&L, which is great, but what's my percentage of winning trades versus losing trades? What's my average stop loss and my average rate of return? So now you can start to gauge, are you a 3-to-1 reward to risk ratio? Are you a 2-to-1? Are you 1-to-1? And then we can start to take that and modify it a little bit. So that's finding out your trading statistics. But then there's time of day statistics. And I told you guys this many times that back in the late 90s, I made most of my money in the opening hour and a half of the market. And I constantly make this joke. I even told it to my mentor. I said, listen, I spend the opening hour and a half is where I make most of my money. And then I spend the rest of the day giving it back. And my mentor just looks at me and he goes, how would you answer that question? I'd say, I'd tell you to stop trading in the middle of the day. Okay. How did I know that? Well, I looked at my trading results and I track it all. So that's how you figure out what's the best time of day to trade. Don's probably saying the right thing here, which says I like right after the first 30 minutes. New traders, if you guys are in your first 6 months, stay away from the opening 15. The opening 15 minutes of the equity markets is absolutely wild. And there are some patterns that form there. But again, if you're not quick, if you don't have quick execution skills, you can get whipsawed real bad. And all of a sudden you find yourself just losing tons of money. So I agree, Don. I would say for me, it's the first 15. Let that first 15 pass, but you're doing even better waiting that first 30 because the bulk of the panic open, whether it's bullish or bear, it doesn't matter, but the bulk of that rush disappears, and then you'll get some nice little trends. Now, you may miss the biggest move of the day, which will probably happen that opening 15, but who cares? I'd rather take that massive potential gain off the table, because it also could be a potential loss, and focus on a consistent, more predictable market move. One of my rules of trade is not trade within the first hour. Cool. And Lori, you're probably watching it though. I mean, you probably watch that opening hour, and at a certain point, I think you'll get better and better and better, and you'll say, okay, now that I see some patterns forming in these markets that I trade, maybe I'll start to, maybe leave the first half hour out, and then you start to trade a little bit. Chris, I trade the first 15 minutes. Yeah, well, Chris, you like stress. That opening 15 is a stressful period. And again, I'm just focusing on equities here. For Jeff, who sent in this question, Forex, it's all about which exchange hours, because you got a 24-hour market. So, do you want to trade the London hours? Do you want to trade the Japanese hours? I mean, you can fix all those different markets. If you're trading crypto, now you've got a truly 24-hour a day, 365 days a year, 7-day-a-week market. Well, okay, that doesn't mean it's all good trading. Each cryptocurrency will have its best time on its different exchanges. So that's another little wrinkle you have to put in there. So I can't answer that question for you, Jeff. It's too vague, and there's just too much unknown. I could tell you that for me, hey, this is my favorite time of the trading day, but you go to try to trade that and it doesn't work for you and you're losing. I can't explain why that is. So you have to do your own personal analysis and find out which time of day works best for you. Okay, last one here, and I'm going to wrap things up. And this, I hope you're here, Karen. Actually, real quick, let me look at some of the questions. Ken says, unions had a larger purpose years ago, but with regulations, laws, I would agree they're not as needed because you do have more labor laws, which help the, now their conditions are poor and owner management doesn't address their labor issues. Amazon workers starting to move. Don, that's interesting. Don says, I used to lose on Friday. Once that clicked, I wake up Friday, manage Thursday swings, and enjoy my day. You know what? That's really funny you say that, Don. It's funny. This is why we get along, because you and I have a very similar, it seems like, track record. When I was doing my analysis and finding out what I was doing right, what I was doing wrong, when I was making money, best times of the day, I mapped out the day of the week. Monday was my best day. It seems like I always did good on a Monday. Tuesday was fine, Wednesday was fine, Thursday was fine, and it seemed like more often than not, I would lose on Friday. Now, I wouldn't lose big, so I would lose a little bit on Friday. And I'll tell you what, you can make money on Monday, Tuesday, Wednesday, Thursday, and you're feeling great. But if you go home and you lose on a Friday, even if it's a small amount, it still ruins my weekend because it's stuck in my head. I would dwell on it. So I got to the point where I would actually make it a point to trade half the trading size just in case I had a losing day. And I also tried to figure out why it was happening. But yeah, I would lose on Fridays as well. But I need volume to trade an asset. Well, then you got to find those opening hours. Yeah, Associate taught me the first 10, 15 minutes trading watch. That's what the volume is. And, to Andrew's point here, it depends on what you're trading. Like if you're trading SPY, QQQ, you got volume all day long. I mean, if you're trading Apple and Microsoft and the big names, you got pretty good volume. But if you're trading some rare, weird little thing, yeah, you're not going to have much volume in the middle of the day, right? You need that opening volume to help fulfill your orders. All right, this is going to be a little bit of a tricky one. I actually thought about doing a whole show on this, Karen, and bringing on a friend of mine who's a CFP, but they're like, I don't want to come on the show, so that's okay, fine. We won't do that one. So here, it's a long-winded question. It's pretty cool. And Karen says, my mom and I like to give Christmas gifts, $100 to each grandchild we have, and it's 8 of them, and make an investment with that money. We invested in Bitcoin last year, and I just cashed out half of what we paid, so down 50%, so sorry about that. And maybe we'll put that money back in. Or should we invest in something else to help grow and invest for each child that they can take out when they turn 18? The oldest is 9, the youngest is 1 month. Last year was the first year we did this. We're considering I-bonds for this year with the Bitcoin money, or we consider buying 100 shares of something like Tesla, or you wouldn't buy 100 shares of Tesla given its price. You'd be buying one share given Tesla's current price. Remember, if you're doing 100 shares, Tesla's trading at $180, so you'd be able to buy less than a share if you're going to buy Tesla per person if you're $100 gift. If they drop lower, what advice would you give us in our future investments for grandkids and her great grandkids? Well, first off, I can't give you financial advice. I am not a financial planner, and I think that I don't have the licenses to give financial advice. But I guess let me flip this around so from a legal perspective, I can say what I would do if I had children and I was thinking long term. And I realize why you pulled your money out of Bitcoin. And when you look at the price of Bitcoin, it's imploded, right? It's just down absolutely tremendous of value from when you first purchased it. However, Bitcoin is not you're going to get rich in the next year or next 2 years. This is a long-term play. When we look at the long-term time frame of Bitcoin, and let me go here to a weekly chart, right? This goes back into 2018, which it should go much. Oh, this is the futures. Let me go to the actual Bitcoin price chart. There's your BTC. You go back here historically, you don't even notice these gigantic moves that happened back in 2013 and 2014. I mean, these are monster moves. What you're seeing is patterns and cycles. And what will ultimately happen is Bitcoin's chart, even though it looks like this, it's going to look over time. You're going to see a chart that's going to do this. And this is my speculation, right? It's probably going to go sideways for a little bit, and then you're going to have a new pop. Let me lock this pen here real quick. And then you're going to see this. And then you're going to see this. And you're going to see this. And then you're going to see this to over $1 million. Okay? It's just supply and demand. So if your target here, Karen, it's for these kids for the next at least 10 years, right? You said the oldest is 9. If it's for the next 10 years, I think I would mix it up. So I would buy $100 worth of Bitcoin and leave that for 1 year. The next year, I might buy something else, and I would maybe mix up a different mix of assets. Now, personally, for me, I would definitely, as one of them, I'd buy $100. And I'm the type of person, I would probably buy $100 worth of Bitcoin every year. Actually, the way I would do it would probably be per month, but I don't want to. You have gift limits that you can do, and you're nowhere near that. I think that if you did Bitcoin and you're thinking that this is a 10-year play, I think you're fine. That said, a lot of people don't believe in crypto. They think it's all going to go away. They think Bitcoin's a Ponzi scheme, and they may be right? We'll just give them that credit. So where would you put it? I think that I would probably, if I took crypto out of the equation, which would be my personal first approach, just because I know I've got a decade at least. In the case of the youngest, you got 18 years. You mentioned buying Apple and Tesla. Personally, I personally wouldn't do that because I don't know the future of Tesla. I don't know the future of Apple. And while today they may be the biggest juggernauts out there, things change. If you study business, you know that there's business models, and they start off with an infancy stage, and they go through a big growth period where things are just taking off. And I would argue that Apple and Tesla are in that big growth phase right now. At a certain point, that turns to maturity, and then all of a sudden things start to decline unless they continue to innovate. Now, Apple obviously continues to innovate, and then Tesla is obviously the king of what they do right now, but they're starting to feel more competition. Every company out there is making electric vehicles now. I mean, every one of them. You got EV trucks all over the place. So that'll start to hurt Tesla a little bit down the road. So I wouldn't buy an individual stock for the next decade. I would go and I would buy an ETF. I know it sounds terrible, but it's going to be a slower growing vehicle. If I wanted that security, I'd buy the QQQs or I'd buy SPY. Or maybe even a market index, like consumer staples, industrials, utilities, something that I thought would have long-term appreciation. And the main reason for that is you're removing the risk of an individual security, because what happens if in 10 years after you bought this thing, Karen, Apple goes bankrupt? And I know it's probably not going to happen, but what if they do? It's that what if. How about Alan? You took that one away real quick. What was that? QQQ what? I would definitely not do any leveraged vehicles. I would not buy a triple or double leveraged vehicle for long-term play for your family or for a gift. What I would also do, so you've got really three things. Number one, my first place for my kids would be crypto because I personally believe in it. I do think the technology is sound. I do not believe cryptocurrencies or digital assets are a scam. I believe that there are scams abound with the people who trade these instruments. And out of the crypto world, many of them are scams. I think Bitcoin and Ethereum are pretty damn solid and probably going to stick around. Same thing with Cardano. Even though people are shaky on Cardano, I think it'll stick around. I think that Chainlink will probably stick around. But those are specifically crypto. I would go with the big dogs, buy some, $100 with Bitcoin, leave it. If I didn't do that, then I would look at a way to make that $100 grow. Now, do I want astronomical growth? Well, hell yeah, right? However, you could buy those I bonds. You did mention I bonds in there, and I think I bonds are a great place. But right now, you're getting 6.9%, which is still great. It's still beating market rates of return, that's for sure. But over the next 5 years or so, most likely those bonds are going to start to decline in yield. They'll still earn some yield, but they're probably going to decline as soon as they get this inflation issue under control. So there's more of an unknown and with I bonds, and you're not getting huge rates of return. Like if you want to get the flyer where you're like, hey, I put that $100 and it turned into several $1,000s in 20 years, then you're probably gonna have to look at speculative assets like cryptocurrencies. I don't see too many stocks giving you 1,000x rate of return in the next 10 years. Now, there will be some, but I don't think that they're popular now. I think the companies that in 10 years from now will be the 1,000x gainers are ones we just don't really even know about. And who knows, it could be some blockchain company that consolidates down and all of a sudden becomes a big blockchain producer. It could be, it could be a cannabis company. If there's a big consolidation in the industry, we get federal legalization, it could be a cannabis stock. I don't know. However, if I'm thinking long-term for my kids, I don't want to do that kind of speculation. I'd rather do something that was safer. So from that perspective, I bonds sound great, but you're not going to get that huge growth rate of return that you like to have. But you do have safety. If you put it in Bitcoin, there's always that risk that someone cracks SHA-256 algorithm and Bitcoin goes to zero. I don't think that'll happen, but it's always a possibility. Let's see, what do we got? How many Ponzi schemes have futures and talked about the markets like this? You can hate it, but crypto is new asset class. And crypto is an absolute, and I'm trying to change my nomenclature. I think talking crypto makes it sound a little, I don't know. I think cryptocurrency will be frowned upon as a term in the future. It's really digital assets, right? It's a digital asset. So it's a digital dollar. It's a digital commodity, whether it's Bitcoin or actual Paxos gold is a digital digital gold. So I'm going to really refer to it as digital assets, and I think that is the current trend. I think that our current systems will adopt digital assets and move over to those in the near future. So that's where I would go, Karen. I would, if I was going to be very speculative and say, hey, I know it's only $100. Let's hopefully I can grow that to several thousand. Then I would go somewhere in the crypto world. And I would probably go Bitcoin because it's the leader, although it's already got a pretty big market cap. You could go speculative and look at some of these other ones that are just starting out. But right now it's scary to think about putting money in that crypto space. I saw a comment there about Matic or Polygon. Sure. But remember, they're a layer 2 scaling solution. And if Ethereum can pull off their scaling solution, Matic could be in big trouble. So I do own Matic. So there's that one. I would go crypto if I was super speculative and said, hey, it's only going to be a few $100, but it could be something huge. I'd go crypto. If I want the stability and want it to grow, I would go I bonds. My grandma bought me some, what they call E-bonds or B-bonds, I don't know. I still have a piece of paper in a closet somewhere that's supposed to be worth $100. So my grandma bought it like, I don't know, $80, and after a certain period of time, it becomes $100. There's those as well. But I think I-bonds are a great thing, especially knowing that for the next few years, we're going to be in an inflationary environment. But my problem with the I-bonds is, what happens if all of a sudden rates go back down to almost zero again? Well, those I-bonds aren't going to produce very much money going forward. There we go. Don says, the problem with the giant on the throne, someone is always looking to dethrone them like Netflix. Yep, you're only king for so long. And I think the real key there is, if you're looking for that individual stock long term, you've got to be looking at what that company is doing. For example, people are always like bad-mouthing Facebook and Meta and saying, oh, God, it's trash, we're moving away. Yeah, but Facebook did some really good investments. They were buying a lot of other companies. So even if Facebook itself starts to perform poorly, they got a lot of other pieces to help their revenue grow. Apple as well. You know, it wasn't just the iPhones, but they've got subscription services and all kinds of different market segments that they're in. If a company's a one-trick pony like Zoom, I mean, how bearish have I and almost every guest that's ever been on this show, how bearish have we been on Zoom? Like, I don't think any one of us has ever been bullish and said, hey, you got to buy some Zoom. I mean, Zoom's looking great. No, it's been short Zoom. Why? Competition. Let me get this stuff out of here. You know, every platform is now doing streaming. Apple, Google, Microsoft all has built-in streaming stuff with Teams, etc. So, you know, you just kind of know that that's coming. And a company like Zoom, yeah, it will disappear. Now, what's great about this is Zoom is in the NASDAQ 100. And a lot of companies are in there. So some new technology, if they start to grow and get bigger, they will be put in the NASDAQ 100. So by buying a tech fund, I think you always have that possibility of holding the next great thing just with another 99 other companies in there in the NASDAQ 100. You can buy SPY as well, but I think that that's a safer play. Yeah, I think that's a safer play would be just to buy a broad market index and let it sit. Remember, the average annual rate of return for the S&P 500 going back in the 1950s is roughly, they say 8 to 10%, so we'll call it 9%. So if you took your $100 and you put that in an account, and I'm sure it's a law of 52 or something like that, averaging, let's say 9% per year, by the time the youngest there hits 18 or 20, there's going to be a good chunk of change in that account. But remember, markets don't move consistently 9% per year. You're going to have an up 20% year, a down 20% year, an up 15, a down 18. You know, it becomes a mess. Sad Zoom is the best platform. It's all right. I'm all right with it. Diamonds are forever, right? Talk about the biggest scam in the world. Diamonds. Sorry, ladies. I'm one of those guys that I just don't get it. I have to buy a $20,000 rock to prove my love. That makes a lot of sense. But yeah, I mean, you could go with jewelry, but I don't think that's the smartest investment. I mean, and you know, another good one we could buy would be, how about this one? I think this might be good, Karen. You could actually go to a numismatist, which is a coin dealer, and you can buy gold coins. When I did Power Trading Radio, I used to give away once a month, I think it was once a month or once a week, a 1/10 of an ounce gold coin. So I could give away a 1/10 of an ounce gold coin. You know, right now that's going to be about $160. So a little higher than what you wanted. But you take those and you just throw them in an account, put them in your safe deposit box, and you know, if you got 8 kids, you have a little bag with each of their name on, and every year you buy a 1/10 of an ounce gold coin. And just drop it in that bag and just keep it in that safe deposit box. And when they turn 18, you hand them this bag of 1/10 of an ounce gold coins. Now, over time, in theory, based off gold, you know, you should have an asset class that is appreciated in value. Here is gold going back to the 1980s. And, you know, had you bought, yeah, there would be some nice appreciation. Of course, I think it all has to do with market timing. All right, you just, the market timing piece here is important, but I think in the long haul, supply is going to diminish on gold and demand will probably continue to go up, especially if we find more industrial uses for it. All right. So, Karen, I hope I gave you some food for thought. Again, I can't give you financial advice. It's just, I think you have to figure out what it is that you want to do with this money. Do you want to slowly grow it? Do you want to make some speculative investments? I personally, like if I had grandkids and they were 1 or 2 years old, I would put it in really speculative stuff. Stuff that I believed in. I mean, I'm not going to buy flyers and penny stocks, but, you know, given my understanding of digital assets and things like that, I think that that's going to be the wave of the future. I think a decade out, we're all going to look back and you're going to be laughing at people who don't know digital assets. Like, what? You don't know how a ledger works or distributed ledger? You don't know what a consensus algorithm is? How do you not know that, right? How do you not use your app to send money and use layer 2 solutions? Today, it sounds like a totally different language. But in 10 years, it'll be like, oh, what operating system are you using on your computer? Oh, I've got a Mac OS. Oh, great. Which browser are you using? Back in the late or early 90s, nobody knew what browser they were using. It's like, anyway. Sorry, I was on a ramble there. If the metaverse and video cards find a happy balance, Meta is going to be the top dog in the next 10 years. Remember, you've got a lot of competition from Disney as well. I think Disney would probably be a great place for a metaverse. I mean, if you took Walt Disney's his ideas, his vision, and just took a Disneyland type theme park with all their characters and created a virtual world, boy, Disney could really do some damage in the metaverse space. But, you know, right now the metaverse is terrible. I think the metaverse is bad. It's pixelated. It's junk. We have 8 kids, 8 grandkids, and each put in 100, so $800 a year. Since 2009, I've taught in Merlin. I like liquid assets. Period. Sorry, I'm trying to look for you, Andrew. Where you got there? How to convince my husband to stop buying me jewelry? I have more than enough. Yeah, it's nice because we want to make you feel like you're loved there, Lori. But I mean, jewelry. What good does it do you? Jewelry isn't an experience. I think jewelry is nice because it reminds you of a specific period of time. But you know what? I got a buddy who I'm going to hopefully bring on the show here. He is traveling through Southeast Asia for months, and his world is so full of memories right now that I think would far eclipse a nice ring or a necklace or a pair of earrings. And if you wear nice earrings or a necklace or jewelry or a nice watch, as the guys like to wear, and you travel through some parts of the world, you can get mugged for that stuff. So I don't see the point in it, but that's just me. I'm a bitter old guy. All right, let me walk you through your economic calendar for tomorrow so I can get out of here. I didn't realize I was going to go a full hour show today. Here is what we've got cooking for tomorrow. Not a lot of critical names, although there are 2 big ones here. You see Salesforce is reporting earnings after market close. Moving down the list there, you've got Snowflake, which when they did their IPO, I said within a year that thing's going to be under $100. It didn't quite get there. Let's bring up Snowflake just so I can show you that I was wrong, but damn, it got awfully close. Here is Snowflake, and man, when they did their IPO, I'm like, within a year, it's going to be under, I think maybe I said less than a year, but it'll be under 100. Well, it didn't. In the first year, it made it down to a low of 183, and it recently got down to an all-time low of 110. So we're still not breaching the lows on Snowflake, but the trend is pretty clear. This thing looks like it's just fading and fading and fading. So anyway, that reports earnings tomorrow. A little Snowflake. You also have Hormel Foods. Yes, let's see if the was it Tyson Foods? Oh, the Tyson Foods is where the CEO wound up in some lady's random bed. That's a good one. Crazy. Oh, good, Andrew. Yeah, I'm glad. 2009, yeah. It's been a long time, my friend. Here we go with your economic calendar. I'm switching around camera shots. Here's your economic calendar. I realize that this is hard for people to read, so let me read it for you. There is a very important number coming out 1 hour before the markets open tomorrow. That is preliminary GDP. Now, remember, the advanced GDP, which comes out first. So remember, it goes advanced, preliminary, and then final. And those are all separated by 1 month. So a month ago, we got the advanced. That was 2.6. They're actually expecting the GDP numbers to get higher to 2.8%. That obviously would be good for the markets to show that we're showing some economic growth and put more pressure on the Fed to back away from their rate increase policy, or at least slow it down a little bit from current levels. That is happening for the U.S. So after markets open, 30 minutes in the market, you have JOLTS job openings, pending home sales. An hour into the day, you got crude oil inventory. So you have a lot of stuff going on tomorrow for the U.S. Now, you also have Jerome Powell speaking. He's going to be speaking, I want to say, it's on there. Where's Jerome Powell? At 10:30 a.m., of course, that could create waves, although I think it's going to be fairly telegraphed. The good news is that will come out after the GDP numbers, which could have a big impact. And also you have ADP non-farm employment change numbers. So a lot of big announcements coming out for the U.S., really starting at 5:15 a.m. Pacific time, an hour and 15 more minutes before the market opens, all the way through really an hour into the trading session. So a lot of big stuff. Now, I mentioned Jerome Powell. If you look over here, this is the Fed funds probability for December 14th, and we've been seeing the numbers drop. So now it's starting to get closer to that 50-50 mark. If you go back about a month, it dropped fairly significantly, and there was only like a 10% chance of a 75 basis point increase. Now it's up to 32%, 67.5% that we're going to get a 50 basis point rise. If GDP numbers show a much higher increase, then you may actually see this back down, and they'll look more towards the 50 mark. But we'll have to wait and see till after that announcement tomorrow. Let's see. Let me go back to your questions here. Most of these are just chat, so I'm going to just kind of skip through those. All right, cool. What are your thoughts on December 1 through December 4th, U.S. selling reserves to oil sanctions on Russia and OPEC Plus? You may look to cut lockdown relative to the side effects. Well, I mean, obviously, anything that OPEC does, anything with Ukraine and Russia, with that conflict, creates waves in the oil markets. Now, if I look just at what's going on with the crude oil chart right now, I would myself be more bearish right now on crude oil. It just looks like the trend peaked out here, going back into June of this year. This is a weekly, and now it looks like we're just drifting lower, making lower lows and lower highs. So my bias would be to the short side, predominantly because of the technicals. Now, I'm trying not to get too wrapped up in what's going on with Russia and the Ukraine and all the political stuff here, but again, any decision from OPEC to cut production, to keep prices high, is going to have a profound effect on this. So I don't know where the bottom is. I don't see oil getting down to $60 per barrel. I think it would make sense for OPEC to say we're cutting production. However, the reality is the U.S. doesn't really need Middle East oil. We have enough of it. We could produce our own oil and survive off of it. But for some reason, we still send our oil abroad. It's kind of strange to me. But I don't think we get anywhere down below 60. So, if you are using options or maybe you sell some puts down around that $60 level, because I'd be a buyer of crude oil at 60, no problem. But I'm not trying to figure all those chess pieces out. It's a little bit tricky for me, Chris, and gets a little bit too confusing. Speak to the dollar. How do you guys try to make this a 1 hour show? The dollar really hasn't done too much. This is your weekly, but I like looking at the daily perspective. That dollar index, I was actually extremely bullish on it, and all of a sudden now, with the thought that the Fed is backpedaling a little bit on its rate increases, is causing some weakness in that dollar. So I think tomorrow, my guess is the GDP number is probably going to come out at 2.8%, maybe higher. Let's call it 2.9. If that does happen, you'll probably see the dollar have a sharp decline tomorrow and a rally in the equity market. So there we go. Yeah, that may be, Dave. I thought we actually did refine, but not enough to supply it. So why not just start building oil refineries and get the refining capacity up to stuff, and then we can basically look at the rest of the world and go, you know what? We don't need your oil. Take it. Dump it. Wouldn't that be great if you could do that to the world? All right, I got to run. I got some things I got to take care of here at 3 o'clock. So I hope you guys enjoyed the open Q&A today. Tomorrow, I had a question on cannabis, which I may actually do a little bit of a segment on weed tomorrow. Don't worry, I won't be high when I do the show. But we'll talk about some cannabis stocks. I know we've got a lot of people interested, although that industry right now seems so flat and boring. But it begs the question, is there some potential upside for cannabis industry? So I'll talk about that on tomorrow's show. If you like today's, give me a little thumbs up. That lets me know you like it. If you're new, hit that subscribe button. If you have comments, questions, feedback, put them down below any of the YouTube videos. I'm happy to do that. And I'll get to those on tomorrow's show. And still planning on having Ryan on Thursday talking about the trade plans, but I'll let you know more about that on tomorrow's show. Take care, everybody. I will see you on Wednesday.